Mario Bova, one of the finance managers here at Honda of downtown Chicago, and today I'd like to talk to you about GAP insurance. GAP insurance, GAP by the way, stands for Guaranteed Asset Protection. GAP insurance is, or can be, an integral part of any automotive loan. And today we're going to discuss what GAP insurance is, why it can be important, and how you, the consumer, can both qualify and attain it. Let's talk about what GAP insurance is first, or specifically the scenario in which GAP insurance is important. When you take a loan out on a car, a truck, or an SUV, maybe a van, you have an amount that you're financing. Let's just say, for the purposes of our exercise today, that's $20,000. Car isn't $20,000. Car is $15,000. And so in this instance, you have $5,000 in tax, title, and license fees. Those fees, although a necessary part of the automobile purchase experience, do not contribute to the value of the vehicle, and we'll get to why that's important in a second. So let's say you take your $20,000 loan for the vehicle, you put no money down, and you finance for an extended term. Let's say in this instance 72 months or 6 years. You leave the dealership. 2 weeks later, you're driving to work one morning, and someone goes through a red light and T-bones your vehicle. Now, because you bought a Honda, and because Hondas are some of the safest vehicles on the road, you're okay, you're unharmed, but your vehicle is not okay. In fact, after consulting with your insurance company, because of course, in compliance with the law, you have full coverage insurance on your vehicle since you do have a loan on it, you consult with your insurance company and they let you know that it is in fact going to be a total loss. The vehicle is going to be totaled. Unfortunately, because you recently purchased the vehicle, and because you put no money down, and because you are financing for an extended term, you have not had the time to build any equity in the vehicle. In fact, you find yourself in a reverse equity position. That means that you owe more money on the car than it's worth. Now, when I talk about the vehicle being worth something, I'm referring to the book value of the vehicle, or what a lender uses to decide what the loan amount a car qualifies for, right? Perhaps the smoother way to say that would be, it's the way the bank decides how much they should lend you on any given vehicle, okay? In this situation, since you haven't had any time to build up equity on the car, you find yourself, because remember, the price of the vehicle was $15,000 and you financed in all your taxes and fees, you find yourself $5,000 in reverse equity. That means that although you have full coverage insurance, your insurance company is only going to pay out the book value of the vehicle, and let's just say that was the $15,000. There is now a $5,000 balance that you still owe to your lender before that vehicle's loan is paid off. I can't speak for you, but I know that coming up with $5,000 on the spot can be a very, very tricky proposition. Before we talk a little bit more about that, let's consider another scenario where you might find yourself in a reverse equity position. Let's say that you purchased the car 4 years previous, took a 6-year loan out on that car, and after 4 years the vehicle's outside the manufacturer's warranty and starting to give you some problems. You want to trade the car in. You come to Honda of downtown Chicago, have our used car manager appraise the vehicle. He gives you an excellent value for it, but you still find out that after calling for a payoff, you owe more money on your current vehicle than it's worth. That's called reverse equity. Now, the good news is that depending on the credit involved in the situation, Honda will allow you to take the reverse equity from your previous vehicle and roll it into your Honda loan so that you can work on paying that off at the same time. You don't have to take a separate loan out for that. That's a situation where on your new vehicle, if you've rolled in $5,000 in reverse equity and you're involved in a total loss accident, the vehicle is stolen and deemed unrecoverable, or the vehicle is totaled in a natural disaster, which in Illinois is typically just relegated to floods or falling trees, things like that, that's money that the insurance company is not going to see as part of the vehicle's value. So again, you'll find yourself in a position where you owe $5,000 to your lender to complete the payoff of the vehicle. Now, like I said, that's not easy to come up with. To me, anyway. So you're faced with a situation where you owe your lender $5,000 to complete the payoff of your loan, and no one's going to help you get into another automobile before that's taken care of. That's where gap insurance comes in. Gap insurance is an optional product. It's not required, but speaking from personal experience, it is perhaps one of the most critical elements to your automotive loan. So if you take a long-term loan out, if you put less than 20% down, if you are rolling over reverse equity from a previous vehicle, or if you're just worried about the equity position on the car you're taking home, you should consider gap insurance, right? GAP stands for Guaranteed Asset Protection, and it refers to the difference between, or the gap, if you will, between what you owe in a vehicle and what the vehicle is worth, according to the bank and therefore the insurance company, okay? Not all gap insurance is the same, but let's just take Honda's gap insurance, for instance. Honda's gap insurance pays off 150% of the difference between those two numbers, just ensuring that there isn't a negative equity position where you find yourself in where the gap insurance can't help you. So again, just to recap, it's going to pay off 150% of the difference between what you owe on the vehicle and what the vehicle's book value is. Okay, it's also going to pay your insurance deductible for you up to $1,000. Now, let's take two scenarios. Scenario one, you don't have gap insurance. You roll over $5,000 in reverse equity from a previous vehicle into your current loan. You haven't put any money down, and you're financing for 72 months. The vehicle is involved in a total loss accident. Now you owe your insurance company your deductible, which is anywhere from $500 to $1,000. You owe the bank the $5,000 in reverse equity that you've rolled into your previous loan, and you need to come up with that money almost immediately. Kind of a tough situation, isn't it? On the other hand, in a different scenario number two, you have gap insurance. Same situation applies. You've rolled over reverse equity into your current loan from a previous loan. You're involved in a total loss accident. You've put no money down, and you're financing for an extended term. But in scenario two, you have gap insurance. Gap insurance is going to pay off 150% of the difference between what you owed on your vehicle and what the bank says it's worth. They're also going to pay, when I say they, I mean the gap insurance company is also going to pay your insurance deductible for you. So you went from a scenario where you're putting anywhere from $5,500 to $6,000 out of pocket in a very short period of time to a situation where you're actually going to be potentially receiving some money back. Right? It's paying off 100% of the difference between what you own the vehicle and what the vehicle is considered to be worth. Right? And you're not coming out of pocket for your insurance deductible. To recap, this situation, you're paying almost $6,000 out of pocket within 48 hours. This situation, you're paying nothing. I think the choice is obvious. If you want to learn more about gap insurance or want to know some more benefits, perhaps want to know where you can get gap insurance on your current loan, or perhaps you're interested in talking about rolling over some reverse equity into a new automotive loan, new Honda to boot, be happy to answer any of those questions for you. You could always contact a finance professional here at Honda of downtown Chicago. Again, my name is Mario Bova, and I'm looking forward to speaking with you soon.